I think that the regulatory picture is moving in a way this year in the United States in a favorable way that is getting Wall Street to take crypto and blockchain pretty seriously. Of course, the killer app or the ChatGPT moment really was stablecoins and Circle's IPO. But following on that was the Genius Act and then the SEC's Project Crypto. And the reason I think this favors Ethereum is many, but foremost, when we look at the projects that are taking place for Wall Street to tokenize assets, whether it's dollars or other assets, the majority of this is taking place on Ethereum. But maybe more importantly, I think, people have to take a step back and realize that what's happening on Wall Street in 2025 is maybe more akin to what happened in 1971. And in 1971 was the year the US dollar depegged from gold. So the US went off the gold standard. And while gold was a beneficiary of that, many people bought gold, it was actually the idea that Wall Street began to innovate because suddenly you had a fiat dollar that you now had to sort of move around and create rails for that was not backed by gold. So the real winner there was Wall Street. Well, in 2025, this kind of innovation, blockchain solves a lot of problems and speeds a lot of things. Wall Street moving onto crypto rails, I think is like a 1971 moment for Ethereum. So I think it's creating enormous opportunities to move a lot of things onto the blockchain. And Ethereum won't be just the only winner, but it's one of the primary winners. And from an institutional adoption perspective, I've heard a lot of people talk about this. Bitcoin's already become very institutional. When I talk to investors and I do meetings, they understand how to model or even think about future value for Bitcoin. And it is in a lot of people's portfolios. Ethereum is so underowned that it's more like Bitcoin in 2017. I don't think Ethereum is actually viewed as an institutional asset today. So I think it's so early, and that's why I think there's a bigger opportunity. Like Ethereum, I think staking is an actual active operating role, right? Because you're providing and validating transactions. And so like that's actually you're earning it from doing something. And it's over time, I think that there is going to be people staking not to generate to do security, but really to have this, to play the power law. Because the power law is the more ETH you hold. In theory, the power law is the more you stake of something, the greater your influence. And so as tokenization, as you're talking about, comes into play, the power law is going to come into play too. Because hey, if we're talking about 4 trillion of stablecoins, how important will it be for the U.S. interest, the collective banking industry, that ETH is staked by U.S. entities, right? So if you think about that, staking is going to be an incredibly important business over time. So its multiple might go up a lot. But on top of that, staking is really reflective of the nature of Ethereum because it's a collaboration, basically, right? People are agreeing to work with each other and become trusted. But Ethereum, of course, is going to have to go through a roadmap of a lot of future upgrades. And that's why every ETH treasury should be making overtures and closely collaborating with like the Ethereum Foundation, which, of course, I know that Bitmine is, and I know SharpLink, etc. But that's important part of the roadmap. And then I think that the third thing I just would point out is that, I think there's going to be a lot more imagination that's required because, like, as you said, Sean, like tokenization makes sense to clients because they realize it's probably a better way to move that asset and to record its actual existence, right, is to tokenize it. So it makes a lot of intuitive sense to Wall Street. But that means that Ethereum is not just serving as like this backbone of like storing, like it's not a big storage locker where you're just throwing all your assets in. It's really providing, a critical backbone component to how the tokenization of the financial system will be and really improving that reliability. So it's, I think that's why as more things get tokenized, you might see an exponential value of the network value rise. So I don't know what the ratio looks like, but it's to me, it seems like it could accelerate. That's why crypto treasuries, the easiest analog, if you said people don't understand it, is look at oil. You could always buy oil, and you can buy oil contracts. You could actually take physical delivery of oil, but many people bought oil stocks. And like, whether it's Exxon or Chevron or the E&Ps, they always traded at a premium to their proven reserves because the companies were actively managing how to acquire more oil. So you didn't always just value them at their proven oil because you knew they were going to use their equity to acquire more. But when capital markets become unfriendly in the oil industry, then the companies that have complex capital structures collapse. So that's why in theory, if someone had perfect timing and they knew of a crypto winner, they would just be a straight equity company. And then they could just buy back their stock, if they traded too cheap. I guess in the crypto winner, then you'll see a much greater spread in relative valuation take place. And then the ones that have the cleanest balance sheets, can buy things. And maybe things will trade at a discount to NAV too. I mean, I don't know.
It's already happening.
Right. And it's exactly.
Yeah. And Sean, you've sent me some spreadsheets, so I've seen it. So yeah.
Do you think that, and I think what you're hinting at, that there will probably be some consolidation in the space?
Yeah. I mean, the bankless guys had a good point, which is they were saying, if you look at the Bitcoin treasury space, MicroStrategy is clearly ahead of everybody else. But you can't necessarily make that claim in the Ethereum treasury space. And I think for now, it seems like people are still able to access capital. So it doesn't seem like it's going to be, I would say that it would have to be a voluntary catalyst, because I don't think there's a crypto winner. I mean, at least my personal opinion, I think, ETH is not a top because it's still the earliest days. And I would say that if there was going to be consolidation, I would think it'd be more natural in the Bitcoin treasury space, because Bitcoin, has made a big move, and I'm still bullish. I think it can go to 1 million. But Ethereum is just so in such an earlier state of where the token value is. One, there's nothing wrong with someone wanting to own an ETF to get exposure, because then they're going to own, without much tracking error, kind of direct exposure to, Ethereum. Just like the Bitcoin ETFs give you direct exposure to Bitcoin. But if you look at the Bitcoin treasury space, MicroStrategy is larger than the largest Bitcoin ETF. So there's actually more investors who are preferring to own Bitcoin through MicroStrategy than through Bitcoin. And I think it's for a logical reason, which is that a crypto treasury isn't just giving you a static exposure to Ethereum. What they're doing is they are giving you exposure to someone who is trying to grow your Ethereum holdings per share. And MicroStrategy is a great example. When they went to pivot to their Bitcoin strategy in August 2020, MicroStrategy had roughly a $13 stock price, and it's gone to 400, well, let's say 30x from that point in the last 5 years. During that time, Bitcoin was 11,000, and now it's about 120,000. So it's about an 11x. That means that MicroStrategy has grown its holdings of Bitcoin per share, while a Bitcoin ETF would have kept you constant. So in that same 5-year period, you'd made 11x owning a Bitcoin ETF, but you did far better because of his treasury strategy. And that treasury strategy is using and taking advantage of the liquidity of his stock and the volatility of his stock so that he can acquire more Bitcoin per share. And that's what Michael Saylor's strategy has successfully done, because he went from having, $1 or $2 of Bitcoin per share to 227 today. So a massive, massive increase. The majority of the time, someone's coming and looking at crypto treasuries with a really skeptical eye. I think many investors who've owned MicroStrategy have done really well with it, but MicroStrategy is not as widely owned as you think, even though it is one of the largest stocks in the market today. And the reason many people don't understand it is that we already have a very big universe of people that don't believe in crypto. I mean, whether you look at any survey, the Bank of America's latest survey, 75% of institutional investors have zero exposure to crypto. So zero. So that's 3/4 of the universe. And when they look at crypto treasuries, they think that these are inferior to holding the underlying token. And so a lot of the education that we've done in our meetings is to explain, and I can just cite some numbers from Bitmine's presentation. The difference in a crypto treasury versus holding Ethereum is simply the fact that we are growing your Ethereum holdings per share, because on July 8th, when we closed the pivot to the Ethereum treasury, there was only $4 of Ethereum held per share. And then on July 27th, which is about a month ago, when we published that update and put it in a presentation, there was $23 of Ethereum per share. So the amount of ETH held per share went up by 8 times, 9 times. And so it really shows you that there is a really big change in how much, what I call the velocity or the accretion held of ETH per share that comes from a properly executed treasury strategy. I think we are kind of witnessing a historical moment in the financial industry because blockchain solves so many problems, and it really does democratize so much of what has been a system of gatekeepers having a lot of control. And in fact, even as we wrestle with concepts like of universal basic income, a lot of that gets solved with crypto. So I think that we should be optimistic in the near term because, Bitcoin and Ethereum could go up a lot, but really it's a very societal positive impact that's coming with things moving onto the blockchain.